Hi guys. I want to start by summarizing what I found in our prior meetings and in my analysis. You guys are a young, two-income earning household with two young kids and multiple financial objectives to be met. From analysis of your spending habits, it looks like you're spending about $500 a year more than you're taking in. You have some credit card debt and some student debt, as well as a car loan. You've recently inherited a substantial holding of a single stock of GFD Corporation, and you stand to inherit another sum of money within the next year upon the passing of Elizabeth's father. You have a retirement account both through work and in personal IRAs, a checking and a savings account. You have life insurance and health insurance both through work, as well as personal automobile and renter's insurance for your personal possessions. Your biggest goals are funding for college for your two children, making sure you have enough money for retirement down the road, possibility of opening a fitness franchise in about 10 years. You want to buy a home within 5, and you want to make sure that any unexpected circumstances that might pop up along the way don't compromise all the hard work you've done. Now, does that cover most of the big items? Well, your strengths that I see are that you have sufficient assets to reach your financial goals. You have a very clear idea of what the successful outcome would be for each of those goals. And you have a long time horizon to get there. You're both fully employed, and it sounds like you can expect continued advancement in your careers. Beyond that, is there anything else you'd like to add? Well, I'd like to first address what I believe is a major overconcentration in the stock that you inherited from your uncle. Now, assuming there are no further issues with your uncle's estate, and I'll explain that later, and assuming that you have no pressing sentimental value attached to the stock, I recommend selling the stock and paying what will amount to be a long-term capital gain on that portion of the holding. Now, I'll explain in detail what you're going to estimate that tax liability to be, but I believe the arguments for selling the stock far outweigh the reasons to hold on to it. The proceeds from the sale of the stock can then be diverted to help you achieve your other financial goals. And by doing so, that drastically improves the probability of you reaching those goals. Now first, a portion will be set aside in a very highly liquid savings account for the purposes of an emergency fund, to pay for any unexpected expenses, pay for your medical health insurance deductible, and also to fund the down payment of your home that you wish to purchase within 5 years. I recommend using a joint account that is FDIC insured. Now, a portion will also be set aside for the funding of the expected expenses of sending the kids to college. I recommend using a 529 account from your home state of Illinois to get a state income tax deduction and tax-free withdrawals of any growth in the account that go towards education expenses. Now, I'm recommending a portion to be set aside for the fitness franchise that you're planning on opening in 10 years with your friend. But I'm mostly recommending a large portion of the proceeds from the sale of that stock to be invested for your retirement. Now, the alternative to selling the stock would be to fund each of these goals using your earned income and excess cash flow, which I don't believe will be sufficient to provide the necessary funding. Now, I'll go into much further detail into the plan, and we can discuss specific recommendations throughout our meeting today. I also recommend you implement the asset allocation strategy contained in this plan to give you the highest potential earning power on your investments for each account. This will include reallocating your 401ks and your IRA and the proportions I've recommended in this plan. Currently, your investments are not properly allocated based on the risk tolerance that we've discussed at your first meeting and in your time horizon until retirement. Next, I strongly recommend that you purchase individual life insurance policies. In the case of one or both of you dies unexpectedly. With the cash flow that's freed up, this should be affordable and shouldn't put a major crimp in your monthly expenses. Elizabeth, I also recommend that you should look into purchasing a disability policy, since they do not offer one at your work. Next, you need to schedule an appointment with an estate attorney to have them draft the documents that I've described in this plan. These are things like wills and trusts, but also powers of attorney and living wills. Now, we'll go into much more detail of that in a bit. Now, those are the big bullet points for the summary. I believe that if you implement the recommendations I've made here, and we continue to meet on an ongoing basis, there's no reason you can't reach all of your financial goals. Now, before we dig in, I need to address a couple issues that arose from our prior meeting. Unfortunately, I cannot fulfill your request to speak with your mother, Ruth, and convince her to sign over the life insurance policy without going into full detail of the ramifications of that action, and ensuring that she completely understands what those ramifications are. Fortunately, the financial plan I've created here addresses your concern for having money set aside for a down payment of the house and also for providing sufficient life insurance coverage. Next, unfortunately, when I made the loan to you several months ago, I violated the professional standards of the industry because you're not a direct family member and I'm not employed by a bank. Now, I sincerely apologize for this error. I'll work with you to rectify the situation and to ensure this never happens again. And finally, I need to inform you that I have delegated the responsibility to a junior member of my staff, to complete the initial financial plan, to continue to work with you on the implementation, and to review and to monitor the ongoing updates to the plan. I do want to assure you that I still bear the ultimate responsibility to ensure that everything is conducted and implemented to your satisfaction. Now, that all being said, do you have any questions before we dig in on the details of the plan?